Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. Taking control of your trading strategy. A lot of traders are guilty of this, sometimes several times over if they could be. A lot of trading and trading without a trading strategy or approach, or worse, letting a good strategy fail due to bad management and lack of discipline. There's a lot of different types of trades and trade strategies, and there's a lot more ways to mess them up. And that lack of structure kind of creates this massive instability where sometimes a trade will go incredibly well. It's usually not the case in this type of scenario. And more often than not, the trade goes south. And this is when you really feel the pain of not having a trading strategy. Because realistically, getting into a trade that works out straight away, it doesn't really require much of a plan per se. You just got in and it shot right up after you entered in. When you get into a trade that sits for a little while, though, or pulls back, that's when you start realizing how important a strategy is, or at least a plan of attack. It usually starts off easy enough. You have a position that comes into profit, then dips back into red. No big deal, right? It still looks good, so you kind of leave it alone. No problem. The strategy's still fine. And then it dips a bit further after a bit more analysis, that you realize how strong this location is for your trade. Should have left it alone, right? I think we talked about this before. After you've analyzed the trade, red flag number 1, and a lot of people do this, myself included, we're all guilty of this. Analyzing a trade after we've already analyzed it. That's how you can get yourself into a lot of trouble. Anyway, so going along with the story, you widen out the stop to make sure that you stay in, because you don't want to give back this opportunity, right? This new opportunity that you just found through new analysis shows this huge potential rally point, and you're long in the perfect spot. It's just, you got to give it that little bit of extra wiggle room. Now you're starting to break rules, the strategy's starting to break down. This is when things start really going south. Because you know how it's going to go, right? The market dips more. Now your should have been small loss has completely given back the entire days, weeks, months, account, trade, because, well, you just didn't close out the trade when you should have. Now you've given back the entire day's worth of trading profits, and when you finally do close it out, because you're probably frustrated, you start thinking to yourself, how could I have done that, right? What was I thinking? What in the world was going through my head when I was doing that? And the important part is what happens next after those questions start coming up, because then most traders will start blaming the strategy. It's a lot easier to use the scapegoat, right? They start blaming the strategy for the loss. What? The strategy had me do XYZ. I didn't do anything wrong. I saw that. It's really easy to push the blame onto something else. Seriously? The strategy said to get out at XYZ part?
And then that level, you ghosted because of some new analysis that had nothing to do with the trade that you were in the first place. We know how this rabbit hole goes. And it's important because if you don't take control of this kind of self-account destructive behavior, it's just going to keep happening. And you can't fix it unless you see it for what it is. And sometimes looking in the mirror isn't always the prettiest thing in the world. And we all know how that goes, especially when we're trying to find the flaws. But when you start working on those things, that's what allows you to look at it and say, you know what, next time I get that urge to kind of tweak the trade or move the stop or adjust it for this. Just remember, that rabbit hole usually happens and it doesn't go in your favor, right? That rabbit hole always ends up in a mincer right at the bottom and it's just waiting for you. And you have to ask yourself when you're starting to get those thoughts. It's okay to have those thoughts. Accept that. You're human. It's going to happen. But understand when those thoughts are happening and say, wait a minute, right? Is it worth risking my entire day of trading? Is it worth risking my entire week of trading? My entire month? My entire account? These are the things that you have to ask yourself. Reel yourself back in a little bit. And if that was the case, if it was worth that kind of risk, then why aren't you in already? Right? Are you chasing? That's when you start seeing the emotional side of things coming in. Remember, it's fine. Don't beat yourself up. It's fine. We all do it, right? And we're going to do it again. It's going to happen to you again. It's going to happen to me again. It's going to happen to every trader again because we're human. It's okay, right? The important part here is that you recognize what's happening, the behavior that's bringing you to those self-destructive behaviors. When you recognize that behavior, right? See how many times I can say that in a sentence. That's when you can correct it before the destructive event takes place. So that's why it's so important to really kind of look in the mirror and really accept what's happening and accept when you're falling apart on your strategy and understand what happens when it does that. We all have those tendencies. We all want to move the stop. We always want to trade a little bit bigger, average in a little bit more because, ooh, it looks good here or looks better here. When it's invalidating your trade, got to get out. There's no other reason. All right, well, that's going to do it. Like I always say, stay safe out there. Keep those stops in play. Don't move them. Keep them in play where they belong. No wiggling. Stay safe out there. Keep those stops in play and let the winners run. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. If you have any video suggestions or something you'd like to see in the next one, drop it in the comments below. Until the next one, though, I'll see y'all then. Thanks.